The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, way out 3,000 miles across from the East Coast to the West Coast. Looking out the window, beautiful view. I was just talking with my engineer here, Al, and we were discussing whether or not I'm looking at mountains or large hills in the San Francisco Bay Area. I'm going to mix them up. There's a mountain at the back, but I think there's a hill in the front. Very pretty. Oh, it's beautiful. This is what one of our dinners, that was a land from Cape Coral, used to always talk about the Florida weather at certain times of the year, and he'd call it this is just absolutely perfect weather, and he would say, and it's the Chamber of Commerce weather. This is what you want to advertise. And I think that's what we've got right here. So it's very nice. And I think in Boston it's still quite cold, so this is a great change, except it would have been nice if we got a little sleep, maybe an hour or two. But we'll do our best here, and my charts are a little slow like like me. Now, why am I here? I'm here because a number of reasons, but the most important was that my wife has a conference here in the San Francisco area, right here. And I said, I'm going to join you. I'm coming out with you. And then I decided one time, because I can do my work from almost anywhere, but at the same time, I said, if I'm going to be there, I want to meet tigers. We've got such a faithful audience all around the world, but especially in the California area, the people that I've never met. I mean, many of the Boston, not many, but a lot of the Boston people. Now it's an opportunity, so I decided I would give. It was not easy putting it together. I haven't been down to check the room, but we've got a very nice room down in the ballroom. The what is it called? Yerba Buena Ballroom at the Marriott Marquis, right downtown. I think it's 55 4th Street, by the Moscone Center, and at 6 o'clock to 8 o'clock. All you have to do, if you're in the area and you want to come, if ever there was a perfect day, this all-time highs in the Dow and the S&P. This is the day you want to know about the tide. Where is the tide going? What are the alternatives? What is going on here? How come there were so many bears all the way up? Even in the last, I felt it as well. We went short for about 2 days just recently because the Dow gave me a peak D and then an E, but you know what? It recycled up, and you just got to change. And right now, you can see the charts. The Dow, this is a 120-minute chart. This is what I showed my subscribers. Left side, right side, potential price time match. Oops, I moved it over. But look at this. That's that falling axe pattern that I always talk about, that expansion to the upside, a declining cone that expands with lower highs and much lower lows. And when it takes out the top part, it goes sometimes to a 1-to-1. Sometimes it recycles twice. I've even seen it recycle 3 times to the upside. This is a 120-minute DIA, which is trading at 147.80, up 1.29. Now, let me just move this chart away. Take a moment. It's a little slow. There you are. Now, this is the chart. I just took out the notations that I had because I thought it was a little bit messy. But look, you see that up channel that I've been talking about? That beautiful up channel. You see that red line, the maroon line? Look how the Dow in some 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 45. Might have missed a 1 or 2, but about 35 sessions since the 25th of February, the Dow is closed underneath this beautiful, and I'm going to talk about this tonight. You want to know about technical indicators that you can use to benefit, to be able to stay in trades for a long time. We got a trade that we still have a good a core position with a fantastic profit from $14.90 is up in the 22s, and we managed to peel off right at almost the last major peak. We took a chunk off. We've got a core position that I don't want to even get. I want to just keep that because I want to add to this particular stock. That's very important to be able to look at indicators. Think of all the people since March and April of 2009 who got out of everything. I know a lot of people have basically not gotten back into the stock market. Are you telling me they aren't going to be tempted at this particular point to start looking at the stock market because they're getting nothing for their yields, nothing for their bonds or the yields? I have to tell you, people are going to be forced into this market. This is still early. Now, on a very short-term basis, this is like C up in the Dow, recycled to a new buy mode. Because of that, I have to look at different parameters. Now, I'm not going to be able to draw it now, but you see, if you can look at this chart, the Dow daily chart, that light green line will be a breakout line extending to the right. Just so that I can do it now, I'll extend to the right, and I'll extend this one to the dashed line, which is what in the ChapmanWave methodology, another thing I'll be talking about tonight. What is tonight? Tonight is a presentation. It's a meetup, really. I want to meet you from 6 o'clock till 8 o'clock. If you're in the area, just send an email quickly. Go to the front page of TFNN. Yeah, I'm a little bit tired. Check on the San Francisco April 10th, Wednesday, at the Marriott Marquis with me, Basil Chapman, and it'll be called the Tiger Technicians Hour. When you get here, there'll be the sign that says Tiger Technicians Hour. And what you want to do is click on that, and that's going to tell you to right there. That's going to tell you to just click on that so that TFNN can immediately, when they get all this information, they're going to email it or just send it over to me today. And then I will be able to tell downstairs Marriott exactly how many people we are expecting, even though there could be some people that just walk in. I need to be able to get enough chairs. That's number one. Number two is if you do sign up and TFNN has your name, then you're eligible to win my CD introducing the ChapmanWave methodology at $249 value, and you're going to get it for free as a prize. So now I've got this chart all set up here, and that says that the Dow is going to could go to this dashed line, the purple line, to the light green line, and that, if I can just move my pointer slowly up there, and that takes you around about 14,000. I've been thinking about this for a little while. Maybe the 15,000 level is going to be just pierced decisively, or the 14,900 is going to become strong resistance. I think I'll have a much better feel of the close today, but in the meantime, look at that beautiful chart, closing below the 9-period moving average only once, in all this time, for 35 or 34 consecutive sessions. That is really beautiful, beautiful action. And that says, now I'm going to try to move this away. Here we go. Moving it away slowly but surely. Don't want to lose it. Just to the side. There it goes. Thank you. Now, look at this. The volatility index. Remember, I spoke about this making an Eiffel Tower reversal to the downside. It hit 12.32 this morning. It's trading at 12.44. It's getting to an area where it can have a bounce. That's remarkable. Look at the 120-minute chart. A beautiful cup formation made a peak F-top at 14,684. Tears to the downside quite quickly to 14,440s. And now it's in leg C up in the 120-minute chart. And even the 120-minute chart says, hey, I've still got a little bit to go because I need to get to at least a D. The trend is just neutral at 1. The trend is actually a little bit negative at 1.02. There's total disbelief in this rally. Now, I can't believe I'm saying this. The Dow is in leg C. I went through this a number of times. I'm going to have to do this a little later on this morning. But this could be a brand new leg A up in the S&P. In daily, a G or an A. That is remarkable. So enough with the salutations to the stock market at this particular point. What I do want to say, the E-minis made a peak F-top, and this really does look like a leg A up. And the 120-minute chart could have recycled to new leg B instead of leg F. Man, I tell you, this is one powerful, powerful move to the upside. So let me give you the numbers. I'll move to another screen. Just 1 second. Let's go. Here we go. The Dow is up. If you're sending me an IM in the den, it's going to be really difficult for me to do anything about it at this particular point. I just want to stick with the charts that are working right now. Don't want to get too fancy. Dow's at 14,799 plus 126. S&P is up 14 at 1583. The comp index is up 49 at 3287. So I just need to go back to that thought before. For those people who got out back in February, March, April, even May of 2009, a lot of the folks who were worried about their retirements and such did get out and have really just took, either they are not in or their monthly payments that they've been making towards their fund, that just keeps going. That's fabulous that it's been able to do that. But there's something else. On the way, at every single level, there were people shorting and shorting and shorting and shorting and shorting and shorting. Think about having just bought the diamonds on March the 6th, 2009, at the very low, the very day of the low, March the 6th, 2009. March the 9th was the low of the S&P. And we held it for a long time, about 16, 18 months, and we got almost a 50% gain on that. Then we got out, and then we used GE as a proxy. We had a nice gain on that. I've used GE again as a proxy for us at this particular point, one of the low-price stock, and we'll see if that's going to give us a percentage gain that the Dow is doing right now. But can you imagine how many points you've lost? You could have bought any of my Dow quartet. That goes to me as well. It goes to many, many people that all the time you could have just a buy and hold was really the way to go, and you didn't have to look at you didn't even have to look at the market. You didn't have to do anything. Just go to sleep or go off on a world cruise. It's an amazing thing. You can look back and you can say, oh, if this, if that. What do we do now? And that's what I'm going to be talking about tonight. It's a really important moment. Now, gold is down 17 at 1569. My thinking was last night that maybe gold, the euro, and the market go together, and bonds pull back, but maybe we're looking at the overall aspect is that, wait a minute, you don't need to own gold now. There aren't any crises going on of magnitude. Gold can have a bounce, and it could be a nice bounce, but it's the stock market, the United States stock market, that is really leading the way. So that's the mentality I think you've got to keep in mind. So gold is at 1569, down 17. S&P is down 30. Silver's down 33 cents to 27.54. Platinum is down. You see, there are very conflicting things going on. Platinum's been very weak. High-grade copper is just stuck in the 3.40 area. Crude oil is down 94, so that'll help the airlines. And bonds are down 23 30 seconds at 146 and 146.09. So with that said, we've got a break coming up. I'm going to try to check my messages here from my engineer, and we'll be right back. Basil Chapman, Tiger Technicians Hour. I hear the music in the background. We'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days, and will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, we're back. Basil Chapman. And what I'm going to be discussing tonight, there are a number of different aspects. I'll give you a kind of a heads up as to the way I'm going to go about it. I'm not a conspiracy theorist. I remember when people used to always talk about they're pushing the futures, they're doing this. My belief is that very often the people who are actually, when one thinks of doing the pushing, are really they're not even sure exactly always which way things are going to go. It's like options exploration. But as a group, it's as if I was once a conductor of an orchestra and a chamber group. You don't have to put up a big sign saying we're going to slow down, you just, body movements, there's just a general aura in the room of moving together so that you don't have to say a word. And that's what I think was perpetrated on us by the media, by the ignorance of the media. Because those stories, look at this chart about this is the worst recession since the Great Depression. Well, this is the iShares of the Dow Jones U.S. Consumer Cyclical Sector Trust. Not only is it at all-time highs, the previous all-time high was at 72.42 back in June of 2007. It did plunge. It plunged down to a low of 32.79. And where is it right at this very moment? Let's see. So 32, if you had to multiply by 3, I would say that's called 300%. You would get to roundabout today's high of 98.91. So you tell me there are people that have money that are spending it. I don't know how to say it any blunter than that. And I think that if you look at the headlines of when we were down in the 66, 6500s on the S&P, all the different crises, where do you see the headlines? There should be, if there were 1.5 inch lettering back at the bottom. Why isn't there 1.5 inch lettering right now? So it's perception, and that's what I want you to remember. I spoke about this. I showed the chart of the Dow from 1932. I don't know how many times over the past years to 1937, 1938, a 500% increase. You go back. I've got many of the headlines. You go back to the New York Times front page all the way through the Great Depression, and it's just bad news, bad news, bad news. And yet the stock market went much higher. Remember, you've got to separate things. To say that there weren't people that had just the most horrible time. People died. People starved during the Great Depression. Yes. But the stock market went higher. What are we looking at? We're looking at the stock market. And that's exactly what's happened here. That if you absolutely ignored news, yes, there were those moments where absolutely news did crunch the market. But overall, we've gone, look at this chart that I'm going to show you at this particular point. Look at this chart, which I will feature tonight. Right here, this is the Dow, INDU. And it's really hard to do. I've become a victim of it as well. It's hard to ignore this. Now look at the pattern that we're looking at here. The Dow has got, and I'll spend a lot of time on this tonight, the Dow has got this trend line right here, and that's way up, I told you before, the 15,900. At the same time, you've got the stochastic, which is holding very well at 94%, very, very well. And the MACD is still acting acting nicely. It isn't as high as it was at the high in 2007, in October of 2007 at 14,198. Well, does that say, now we've got room to go higher? Or does it say, uh-oh? Well, look at this. The price-time match of the S&P, now this is one that I will be showing, spending a lot of time on. Is this the one? Yeah, this is the one that I've shown. I show my subscribers all the time. I show it here in the den. This is a very simple chart. This is not the one with all the channel lines. That channel line one is just a beauty. But this is the one that I discussed quite some time ago, and I showed that I had a price-time match that went to May. That was the Dow, April, May of this year. Didn't believe it, but I said that's what it looks like. But that's not the issue that I want to talk about. Look at those declines. Higher high, higher low. Higher high, higher low. Higher high, higher low. Higher high, well, we'll see if we're going to have a higher low or whether this is a low that takes out a very important low of November, wasn't it? Yes, November in the S&P of 1343. So far, all the patterns that I'm looking at say, and we've spoken about this a great while ago, I've shown the channels, the chart for the channels, but what I made a big emphasis on was that in all the other moves, there were at least two complete, if not three, but there were at least two complete buy modes that went to a T, D, E, or F.
You can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Sorry, the worst thing you can do in media is to talk right through the commercial, and that was not very good, but I'm using a telephone instead of my usual beautiful setup that I have with earphones, etc. So I'm doing my best. Here we go. So now what I'm looking at is in the S&P, you see this colored line is actually pink on my chart and yours is a little different color. You can see that that's been the historical 1557.87 was the high back in 2000, March of 2000, plunges down to 768.67, October 2002, starts a brand new move, goes up to October 2008 to 1576, right in that 1550s area, just above it. And then comes all the way down to 66.79 March of 2009, all the way back. Now, if you look at the time construct, if you look at the time from 2003 to 2007, the 4-year period, we've just covered the 4-year period. Is that a 5-year period? Let's see. 03 to 05, that's a full year. Full year, that's 1 October. Yeah, so that's 1, 2, 3, 4, almost 5 years. So we've done 4 years, and we're into the 5th year. Does that say we could do a time sequence match? Well, it's a concept, and that would say, well, there are a couple of things that we've got to talk about right now. I want to just move this chart away because I want to talk about, a little bit about time frames. This is the one that goes down here. Get it away over there. Good. Oops. Right there. Okay. Now, talking time frames, what we're looking at is there's another very steep channel that we're looking at here that says there's a join in the trend lines, a crossover that occurs round about somewhere between May and June that takes the S&P up to the area of about 15,582 to the 15,900 area. That's important. Why? Because in the S&P, SPX, which only has just made its all-time high, there was a very long-term trend line that has just been taken out last month and this month, which leaves it somewhat open to the upside at this particular point, because the trend lines that I would be using are new trend lines, and I'd put it in something like this. Start at the bottom. I like to use the two trend lines. I might use the wick of the candle, the edge, or I might go to the body of the candle. It depends on what my eye tells me. This is one of those things where the computer can do something, but actually I find that the human eye is just a magnificent, there we go. Is a magnificent identifying just instantaneously patterns that have inflection or deflection points or just nuances that, through the background of our own historical perception and looking at the charts, we're able to decipher a little differently into the mathematical product. And my eye says that there is a line that's going up, a trend line that's going up, that says that the S&P has the capability at this particular point to go into the inside track resistance area, which would be around about 1656 to 1656-ish area. Well, 1656 is another 800 points on the Dow, 800 or so points on the S&P. Is that possible to do right now? Well, now let's talk about something else. When we're looking at chart formations, not only do you have to look at chart formations that repeat over and over, you've got to look at chart formations that have kernels that you can call fractals. And what I've been looking at for a little while now is that in some of the charts they've made that stalk leg formation twice, and that the body of the one. Now I think it's UTX. Let me just have a look. The UTX. Yeah, UTX is a great example. Oh, what a pity. We missed buying a call option by 10 and 12 cents yesterday, which would have been just a beauty. Look at this. So my Dow Quartet, which is like a little mini index that I have that I've used for years and years. Sometimes I have guest artists, maybe add two more, maybe a DuPont or a Deere or something like that. Well, that's not in the Dow, but Caterpillar, DuPont. But in the meantime, back at the ranch, UTX has always been my pilot's light indicator for those four stocks: GE, IBM, Triple M, and UTX. And look, it made the beautiful leg, body, and then a kind of a neck, the head, and the beak. And now that whole neck, head, and beak has become an oval formation, the golden egg, I call it, because if it broke 94, I said it can go quite a bit higher. Well, it's trading at 95.47 right now. That's not the issue. The issue is that this looks like it could be brand new leg C in the daily chart. But when I look at the E-minis and I look at the S&P daily, look at this, SPX.X. Yes, this could be a leg. Here's another pattern that I spoke about, that consecutive higher stalk leg formation. We've just done it, and we've done the neck, we've done the head, and we've got the beak, and now is this brand new leg A? Is that even possible with a stochastic at 69% in the MACD not yet crossing positive? Well, that says if tomorrow there's a sudden reversal, and then the S&P struggles to go much higher than the high of today, whatever that is, and it creates a doji candle, and by Friday of this week or Monday of next week is a very sharp sell-off. Bonds suddenly take off. The volatility index finally gets some legs to it rather than just a sudden pop to the upside. Actually, then you're looking at this candle, the Roman candle of the 5th of April. 1539 was the low, 1559 was the high. But it's the body of the candle, the area in this area right here. If the S&P at any point in the next week and a half goes to anywhere in the 1550 to 1548 area, that's going to be very negative. Well, what would it take? Well, I would have to say that at this particular point, the market is becoming a little immune to outside forces. It'll have to be something internal. It'll have to be something that the Fed has either said or leaked or whatever it is, because it's going to have to be something very dramatic to change the course and change the tide to sustain this downside move, when even now the move just from the 1538-39 area to today's high 1586, that's 50 points in the S&P. Even this little mini 4-day rally has left people at the station waiting for the train to come in. I feel the same way. There were stocks that I wanted to buy, I didn't buy because the move was so quick. So I don't see why, since I'm watching the market every minute of the day, why many other people who are not watching it all aren't feeling the same thing. So let's do this. Let's look at the TLT, and this is the iShares, the Lehman 20-year T-bond fund, made a peak D top. Isn't that amazing how many times we get these peak Ds? Peak D top, beautiful, beautiful move to the upside. Doji candle at 123.43 on the 5th of April. Pulls back to where? The 200 period, I spoke about this the other day, the 200 period exponential moving average in the daily chart and the 9-period exponential moving average, all here in the 120.30 to the 120.20 area. Let's call it 120 area. So if bonds pull back deeper from there, that's going to save money. I believe we've been seeing this for a little while, although there are statistics to say that money has not really been taken out of bonds and put into the stock market. But I sense that money that was dedicated to bonds is actually filtering into the stock market. But we will see at some point money coming from the bonds into the stock market. It's just inevitable. I don't even see what would stop it from doing that. So that's that. Now, look at this. There was a short-term signal in the dollar that there was almost pretty sure that there was a peak G that was made with the technicals horrible. The MACD, look at this. If you're looking at Tiger TV. Now, don't forget, folks, tonight, you're right here at the Marriott Marquis. I'll be talking about, I don't know how much I'll be able to, I don't want to turn it into, it is called the Tiger Technicians Hour. I just want to have a very familiar name so people would know which room to go to, and that's going to be Nob Hill CD. But most importantly, that's in the ballroom. Most importantly, what you're going to be looking at is what is working, what has changed. Remember I spoke about the three bears, VIXI, Bondi, and Dolly? Well, in fact, bonds have held very well. The dollar has actually had a pretty good rally, not great, but a pretty good rally. It's only this thing. It is only the VIX index that is constantly, for 2, 3, 4, 5 years, been the key. And what is it? It's a 12.72. Now, here's a divergence that I'm taking seriously because I want to see if this flurry of activity over the next few days into next week is going to create something in the volatility index. There's certain things I'm going to be looking for, but what I will say is that the H pattern that goes to an M pattern, so that we might be seeing it back in gold. But most important thing about this is that I want to see whether or not the volatility index is able to take out and hold under the low of 11.05, I think, yes, 11.05 back in mid-March, because right now it's at 12.74. It's almost 2 points higher, and the market is at all-time, the Dow's at all-time highs, and the S&P is at all-time highs. Now, the one thing I want to do before we go to a break coming up very soon, I'm listening carefully for it, that with all the different crises we've seen, 89.53 back in the VIX in 2008, hugging the channel that goes between about 19 and 11 or 10 or even 9, that is buying pressure. And that buying pressure is related to the volatility index being flat. There is no sign of strength at all in the volatility index in the monthly chart at this particular time. And the MACD, the fast-moving average, is still underneath the low one. But now let's do this. What would be a sign that we could look for to say, uh-oh, now the market is getting to a point where you've got to be very, very careful? Well, we are in leg C up in the New York Stock Exchange. And the New York Stock Exchange is up 0.99% at this particular point at 91.78. 9687 was the high of consequence, not the all-time high of 10,387, but that right shoulder failure that I use in my CD introducing the ChapmanWave methodology. I talk about that. That's in May of 2008. And that is going to be key, that 9,687. I would have to say that 9,590 to 9,700 area, that is the target that I would have from the New York Exchange. Now, is the overall market going to say, okay, Dow, you can lead, S&P, you can follow? That's very unusual. And New York Stock Exchange, you can just be a real laggard, but you should be 2,000 plus stocks. You should be way up there. But you know what? It's the makeup of the New York Stock Exchange. I would not be surprised from the characteristic if they have many of the bank stocks. So, well, this is 50 minutes of talking here. I'm looking at the XLF. Is this brand, especially with the doji candle of yesterday, is this a brand new leg A, or is it a follow-up leg D? Well, this is the same thing with the MACD and the stochastic and the daily chart. I suspect that the money is going to go into the laggards. And the laggards are the financials. The laggards are the GEs that say, whoop, there goes a fire engine, huh? All right. The laggards are the ones that I would not be surprised to see fund managers this year go into that area. That gives the market rotational strength. It means that the IYR, that is the REITs, this is a commercial REITs, which had a spectacular move, at some point might slow down a little bit. Uh-oh, hope that's not for me. There they go. And the IYR, that's the iShares Dow Jones REIT index, is at 94.99. The 94.99 was the high of February of 2007, and we are only at 71.75. So I'm sorry, Rick. I know that you were talking. You were waiting online. I didn't see that. I'm going to do it right now. You wanted to talk about UTX. Let me just tell you quickly. You always have information for us here at TFNN that, well, not that everyone, but certainly often stuff that I wasn't aware of. So I'm sorry that I missed your call. If you want to call and just follow up on that. But UTX, there's a beautiful channel line. First of all, this is an all-time high for United Technologies. And we've got a break coming up. Good, break coming up. I wanted to just show this inside track resistance. UTX is getting close to it. This is leg C. It will go a little higher. We'll watch it closely. I'll be back straight after this break. Basil Chapman, Tiger Technicians Hour in San Francisco.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back. Next week, I hope I'm going to be able to start doing a little bit more in my market trends perspective and talking about the kind of buildings that are going up. I just read now that the whole waterfront, a certain area of the waterfront here in San Francisco is completely being redone. They've got huge plans. I mean, all these cities are crying poverty, and they're building unbelievable mega structures. But I think that we're talking about a rotational market right now. And the rotational market says that the home builders, like Toll, Lennar, I think they deserve a well-deserved break. Let's put it that way. I think that's important. At the same time, some of the cyclicals are really starting to become leaders. They are acting like internet stocks. On the one hand, that's fantastic. On the other hand, that's not good, because the more vertical they start to climb, the more problems we will have later on. So I spoke about the XLF, but I also want you to, since when I was looking at the map coming in, of course, I had all these young people leaving Boston from their meetings, Google and whatever, and coming into San Francisco talking high tech. They had all these incredible gadgets really helping us to do simple tasks. It was funny. So let's look at the semiconductor index, because many of them, are based to have at least. So look at that. Semiconductors, the monthly chart making that big double cup pattern. The weekly chart is just, it's a great candle, but the day is young. If the SMHs do get into that wick of the 36.18 high of the week of the 15th, That's going to be important. But look at this. Look at the pattern. I love to draw it. It's the easiest thing. You learn how to use two lines, folks. Learn how to use them. It can really help. Look at this. You just draw a trend line here and a trend line. You can make it. Let's just do it. Make it easy. You just go click. Most of you have the kind of software that you can draw parallel lines and a trend line there. It says if the SMHs, which are 3551, can take out 3575, that 3618 will become instantly a very important level because this is a brand new buy mode if it goes to a new high, a buy signal to a buy mode. That makes it leg E in the weekly chart. It makes it a breakout to leg, if it happens this month, it's only leg C, a brand new leg C. So you've got to look at these things as if to say, okay, where's the rotation going? What's been weakest? Where will fund managers in this particular move try to play catch-up? They have to try to play catch-up. Otherwise, they're going to be way behind. So that's what I think is happening. We're looking at rotation going to different sectors. So I'm going to be talking about some of this tonight. Please come join us. Go to the front page of TFNN. Just click on the workshop presentation for tonight. It'll take you, and all we need to know is we want to know if you're going to be there because we want to be able to get enough chairs. That's number one. Number two is we want your name down so that when I draw for the lottery tonight to win my CD, Introducing the ChapmanWave Methodology, $249 gift, you've got to be there. I need the names. Anyone coming in after that, I needed to go. Everything has to go through TFNN. And this is a lone venture. It was an experiment on my part. Once I was here, I said, I can't waste my time. I want to meet people. I want to see people. I want to talk about the market. I want to get their impact. I want to be able to give something. We love teaching, and it's just going to be a teaching moment, a teachable moment. And for me, I hope, I'm sure it's going to be an enjoyable moment. So tonight, 6 o'clock, 8 o'clock California time, and check in at TFNN. Just let us know. They will be emailing the list. And I'm really looking forward to meeting many of you. There's people have been signing up all over the show. I love that. I'm looking forward to seeing you. And that's a testament to the work that Tom has done here and everyone else at TFNN to be able to make things move so smoothly. So I'm looking forward to that. I'm about to wait for a break for the sign-off music. So then comes Larry Presidente. Larry will have a great show as always. We got all the shows coming up this afternoon. And I'll be back tomorrow, and I'm probably going to take off Friday. So have a wonderful rest of the day. I'm just stalling here to hear the music because I need to walk around, stretch, get some fresh air, and have something to eat. And maybe even